Boom. All right, we're recording. All right, let me share my screen here. I want screen 2. Cool. All right, so this is TradingView. This is the platform that I like to use to chart out my stocks. Sometimes I use it to analyze data as well, but I like the economic calendar TradingView has set up. You can also look at MarketWatch. I think MarketWatch has a more simple approach. They take a more simple approach to the economic calendar if you don't want to look at, want to navigate TradingView. But so far, what I see is that Monday we do have a few things happening, nothing major. Actually, we can make this simple. We can turn on this. This is the high importance toggle. So when you turn on the high importance, it shuts down everything that's not rated as a high importance event. So you can see Monday, Tuesday, Wednesday, we don't have anything major. Thursday, we do have the, this is a week back. I was wondering, I was like, GDP was last week. 1 second.
Oh,
there we go.
Where are you finding that page, Ladarius?
Yeah, so you can go to products here, calendars, and then economic.
Okay, great. And then how do you figure out which one's the important ones? Is there something you click?
Yeah, this button right here. This little ladder or stepping, like a step stool. But yeah, if you hover over, it says only high importance. So if you turn it on, you can see there's a lot of clutter on here, right? We don't need, all of this is not going to push the market up or down. This is just what's happening in the US. You also may want to change this because it may be on the entire world. So you can also add like US. I know, Ty, you're in Toronto, so you could add Canada, so on and so forth. But I have mine set to US, and then I hit this so it can clean up the calendar for me, so I don't see a lot of clutter. All right, so Monday, nothing too important. Tuesday, we do have job openings. So the importance of job openings or any job related report right now is that it gives the Fed a good gauge on inflation. Inflation has been a conversation for the Feds for the last, 4 years or 3 or 4 years, ever since COVID. So anything related to jobs. And right now we're trying to push for a rate cut. I'm hearing September, could be November. But if the job openings or any job related report comes in to the right tune, then we can get that that rate cut. So on the 31st, Wednesday, we do have the Fed speaking. So you may want to circle this date on the calendar. This is important because this is where we're going to get more commentary around if the Feds are actually going to cut in September, right? We're listening to every single word to see if they're going to be hawkish or dovish. So hawkish means that they're going to be, gunning for it. Dovish means that they're going to be pulling back away from what they said that they were going to do. So if you're in the Discord, I'm going to post the actual link to the video. We can all watch it at the same time. If you have any comments or concerns about it at that time, you can let me know. But I always like to tell traders that an hour before this comes out, you may want to go ahead and close out a few of your trades because you don't know which way it's going to go. You don't know what Jerome Powell and the Feds are going to say. We can kind of predict that they're not going to increase rates, right? And they're probably not going to cut rates. So rates are going to stay the same, but it's the conference at 2:30 Eastern Standard is what either drops the market or pops the market, right? And then again, an hour before that, so around 1 p.m., 1:30 Eastern Standard, the market starts to drop because everyone's just selling off, taking profit before the actual conference. So if you play options, that could be an opportunity to play puts, play the market to the downside. And if you're in a position that's up, that could be an opportunity to go ahead and hop out and take profit. It just depends on, risk management. Thursday, we do have the PMI, which normally the PMI alone would be extremely important. But right now, since we have the Feds coming up first, this is the biggest event for the week. This is what I'm paying attention to the most. But then we have the PMI, which is cool. Still something to pay attention to. But whatever happens on Wednesday, it's probably going to trend for the rest of the week. So we get a pop and a spike on Wednesday, then we're probably going to continue that throughout the week into Friday and then we have to figure out what happens Monday. And then Friday, we do have non-farm payrolls and unemployment rate. Again, anything related to jobs you want to pay attention to, but it looks like the unemployment rate, the forecast and the prior, it looks like it should stay the same. Now, if we get, the unemployment rate is going higher, that's kind of what the Feds want. The Feds want higher employment so they can be justified when it comes to pushing through the rate cuts. And if we get rate cuts, that means that inflation, again, should be cooling. I've heard Jerome Powell say that inflation doesn't have to be at the 2% mark to cut rates. So I think that's why everyone is gunning for September. So nothing too major this week aside from this right here, the Feds. I'll always pay attention to this. And if you've never watched a Fed meeting, I would recommend it, especially if you plan on trading long term. You don't just want to, add money. You actually want to trade, not invest. If you're investing and trading, cool. But if you're a trader, then you definitely want to pay attention to this because it could throw some of your trades out of whack. All right. Any questions about the economic calendar? Check the chat. Any reliable auto traders? I don't know of any auto traders. If anyone that's in attendance, if you know of any auto traders that have worked for you, you can post them in the chat and we can take a look. All right, let me go back. All right, so let's do the indicator breakdown. Stock that I like to pick the most is the SPY, one of my favorite stocks. All right, a lot of stuff happening. Let me clean this up. You can tell we've charted the SPY a million times due to all of these lines, but let me clean this up for you. And it's actually pretty simple. Once we clean everything up, you don't have to use all of these indicators. I like to tell everyone that when I first started, I did not use all of these indicators. These indicators I started to pick up along the way because it was certain information that I needed that I thought was beneficial to my trade style. So you don't have to use all of these indicators. You don't have to use all my strategies and techniques, but you could find, some of these indicators useful. You can add them to your chart and, you can use them for whatever strategy you decide to go with. All right. So I mean to zoom in like that. Let me back out. All right, let's start at the top. The first thing that we're going to look at is the RSI. Easy indicator to use. The RSI stands for Relative Strength Index. We're looking at this on the daily. So you really don't have to adjust the RSI as much as you could adjust the RSI. There's a lot of different ways to adjust this, but when I'm swing trading, and I normally swing trade on the day and week chart, I don't need to adjust my RSI. With that being said, the RSI stands for Relative Strength Index. The RSI is pretty much telling you if the stock is overbought or underbought. I like to call it hot or cold. So if the stock is overbought, it's going to be between 65 and 70 towards the top side of this purple area. You can see the numbers on the right-hand side. So 65 to 70 in my book would be overbought. And then you have underbought, right? So you have overbought, underbought. Underbought is going to be 35 to 30. So the bottom line right here is 30. And then you have this 35 area. So 30 to 35 down here, it is underbought. 60 to 65 overbought. You don't want to buy a stock that is overbought. So if the stock is overbought, that's a stock that you may not want to trade, especially if it's on like the daily and weekly and you plan on swing trading. Now, if the stock is overbought on the daily and weekly, but you plan on scalping or day trading, then the information may not be useful. You may need to look at a different time frame, right? You may need to change this day down to a, 1 hour chart, 15-minute chart, 5-minute chart, so on and so forth, depending on the strategy. But again, if we're swing trading, and again, a swing trade is just buying low, selling high, then 35, what is the name of the indicator? The indicator is the RSI. So every indicator that we're going to be looking at, top left-hand corner is going to tell you the name of the indicator. So the RSI, Relative Strength Index, is the name of the indicator. All right. So again, what you want is you want a stock that is warm, right? So if the top is hot, the bottom is cold. This dotted line in the middle, which is 50, is warm. That's what you want. I normally like 45 to 55 pointing up on the RSI is a good indication that I can go ahead and move on to other indicators for this trade. So right now the RSI is at 46, so it meets that criteria and is pointing up. I'm not saying that you can solely trade off the RSI. I wouldn't solely trade off any indicator, but this is a good starter indicator to see if it's even worth looking at, right? So let's say I looked at the SPY and the RSI at one point was at 75. That tells me right off the bat that this is probably not a good stock to swing trade. Why? Because it is overbought. Again, 65 to 70 is overbought, and anything above 70 is definitely overbought. Like we have 79, 77, and 75, right? All of these are overbought. So I would never touch an RSI for a swing trade this high. You can see what happens. It peaks at 77, tanks off all the way back down to 63, peaks at 79, pulled all the way back down to 68. This one peaked at 75 and shot all the way down to 50. So that's why I like to play reversals. I like to play things to the upside that is getting hot. And once they get extremely hot, I go ahead and take profit. So ideally, again, over here in the purple, you want this number to be between 45 and 55 before you enter the trade. Once you enter the trade, you want to exit once this number hits anywhere between 65, 70. Sometimes you may get out at 60, depending on what your other indicators look like. But this is the first indicator that I check when I'm looking for a swing trade. Ty, you got a question for me?
Yeah, so for swing trades, you check the daily. Are there other time frames you check? And then what happens when you check multiple time frames and they have conflicting RSI data?
Yeah, so when I check multiple time frames and they have conflicting RSI data, honestly, if it conflicts too much, then I won't trade the stock. Like if I look at the daily and it's at let's use the SPY for example. The daily on the SPY, we got a 46, which is decent, right? And the next time frame that I would look at if I'm swing trading, I would look at the weekly. So I look at the weekly, is at 64. So that's pretty high on the weekly. I'm like, don't know if I want to touch that one. And then I will go back one. So I have, if I'm starting with the day for a swing trade, I'm going to go up to the week to see what I got. And then I'm going to go backwards to the 4 hour, right? Because a day is just pretty much an 8 hour time frame. Unless you're trading like a 24-hour market. And then you go to the 4 hour, you look at the 4 hour and you got a 42. So 42, we got a 42 on the 4 hour, which is okay. We got a 46 on the 1 day, and then we have a 64 on the 1 week. So if I'm doing multi-time frame analysis and I'm looking at these different time frames for the RSI, then I may say, I may wait until the RSI is more favorable for me, especially on the 4 hour in 1 day. But I think that it could come down. That's why I said you don't want to trade solely off of this indicator. This indicator is a good just first stop to see if the stock is worth trading. So I check it on the daily. RSI is at 46. It's pointing up. Okay, cool. I'm not completely convinced, but I'll investigate further because the RSI is favorable on the daily. Does that make sense, Ty?
Yes, thank you.
No problem. Any other questions? Good question. Cool. Silence is a thumbs up for me. All right. Main body of the chart. Again, top left-hand corner is telling us what we're looking at. Let me see. Question in the chat. Do I use AI? I don't use AI to trade, and I don't use auto traders. We do have some bots that we're working on, but the bots aren't trade bots. The bots are triggering off of like support, resistance, supply, demand zones, MACD crossover, so on and so forth. But no, I don't use AI to trade. I like to look at the chart and manually trade, manually pick my spots, and then I set my I guess you can call them bots for selling out, like stop losses pretty much. So, but no, I don't use any AI to trade. All right, cool. This is the main chart. So one thing that I just like to go over real quick is that each candle represents 1 day, right? Regardless of size. This big red candle is 1 day. Decent sized green candle is 1 day. This candle right here, this almost blank candle, is still 1 day. So anytime you're looking at these charts, one candle represents 1 day, and just remember how they open and close. Green starts at the bottom, close at the top to show that the price rose that day. Red starts at the top, close at the bottom to show that the price dropped that day. Real simple. And then if you change this from daily to weekly, each candle represents a week. If I change this to the 4 hour, each candle represents 4 hours. Simple enough, right? All right. Let's talk about support and resistance. So support and resistant lines are lines that are going to help you identify tradable ranges. A stock won't just go from 0 to 1,000,000, and it won't go from 1,000,000 back down to 0. There are certain levels that the stock is going to hit and it's going to bounce, or it's going to hit and bounce back up to support or resistance to give you an opportunity to make money off of a swing trade. So, well, let me see. Why are some candles smaller than others? Good question, Ty. All right. Before I go into support and resistance, let's look at these candles. So the reason why some candles are smaller than others is because that means that the price movement wasn't that much on the day, right? So if we look at this blood red candle on July 24th, this means that it started the day here at about 548, and throughout the day, it continuously dropped until it ended the day here at 541. So it started at 548 and ended at 541. So it's a $7 drop on that day. If we have a candle like this, it started at 554 and it ended the day at 553. So it only dropped $1 that day. Same thing for the green candles. Started the day at 543, ended the day at 548. So it climbed that day, regardless of the size of the candle. This candle right here, it started the day. We have to get a little microscopic on this one, but this one started the day at 555 and ended the day at 550. This 555.40 ended the day at 555.27 or somewhere around there. So pretty much a flat day. That's what we would call a flat day, is when you have a candle like this. Stock didn't really move. And a lot of times you get candles like this, small candles like this, when the stock is consolidating, either on support or resistance, and it is getting ready for a nice move up or down. So you can see this for green and or red candles. You can see we have green candles doing the same here. That just means that it was pretty much a flat day. Now you also have these wicks, these lines that are coming off, coming from above and below the candles. This is showing where the stock went that day, but it didn't close, right? So if we're looking at this big candle right here in the middle, and you have this wick that went all the way up to 550, that means at some point during the day, the stock price was at 550, but then it closed lower. And remember, the body of the candle is showing where it started and where it ended, right? So it started the day here. At some point of the day, it went up here, but then it still came all the way back down here and closed. It even went down here and then came back up. So the wicks are formally called shadows to show you where the stock went that day, but it's not within the range of where it closed and opened at. Does that answer your question, Ty?
Yes. And even if the price moves above the previous day and then ends lower, that candle will be red, right? And vice versa. So
Yeah.
even if it starts higher than the previous day, it doesn't show you as a green candle going red. It's just the end price is what determines the color.
Yeah, these candles are set on the close. So the colors are based on where it closed at. So if it's green, it closed up. If it's red, it closed down. So yes, you can adjust. There's different rules. If you want to, adjust your candles, you can flip flop it or, change it. But I think that's just too complicated. And I haven't found a reason to do that. But yeah, standard settings is that the candles are showing you the color based on close. So on this day, it closed in profit. It closed up. On this day where it's red, it closed down. It was lower. Does that help, Ty?
Thank you.
Cool. All right. Support and resistance. So support and resistance, they're drawn the same way. You need 3 or more touches and you can place your line. So let me get a line here. Actually, make it a little lower. All right. So I will put my line here. The thing about it is that when you have support and resistance, they're drawn the same way. The only difference is that support is going to be below the current stock price. So the current stock price right now is 544.44, and we put a line at 544.02. This is going to be support. Think about the table supporting, your laptop, computer, so on and so forth, printer, whatever. But the line below the current price is going to be the support. Resistance is going to be above. So we could put a line. Yep, we could put a line here easily. And then there's multiple levels of support and resistance. That's why when we first looked at this chart, I had a whole bunch of lines on my chart. But this is a way to manually plot your support and resistance. There are ways to they do have indicators for support and resistance. So it's like an I forgot what it's called, auto resistance, auto support, and it will plot them for you. But sometimes they're wrong. So I like to plot mine myself, just to make sure I know what I'm looking at. And it was an easier way for me to learn when I first started trading, is to do it by hand, so I can know exactly what any indicator would be doing if I needed to use one. But yeah, so we have support at 544.02 because it's below 544.44, and then we have resistance at 555.97. The reason why I picked these points is because you can look along this blue line and you can see that regardless if the stock is going up, it's surging up, or pulling down, it stops and checks in at this point and it bounces more than 3 times, right? So if we scrunch the chart up a little bit and we start in this area here and we take the run up, you can see, boom, once we hit that 544, 545 area, the stock started to act a little weird, right? It was climbing this whole time. It hit this price point. You can see we got 2 red candles here for rejection. We got a green candle that broke, and then it came right back down onto this price point, and we just got a lot of chop. So that's way more than 3 touches just in this area alone. And then on the downswing, on the downtrend, guess what? It was dropping down. Boom, it still popped back up to check right back in around that 544 line right there. So more than 3 touches will give us an identifiable support. And then to the upside, same thing. You need 3 or more touches, and you can go ahead and call that resistance. Now, in this area, we have about 3. We have a couple touches here, and then we have a couple that on this green candle and red candle, they went back up here. So we have exactly 3. Actually, we have 4 in this area because we got this big red candle that touched. Let me zoom in. So got this big red candle that touched here. So again, if you just see a cluster of flat line candles, that's probably support or resistance, right? So in this area where we have some consolidation, where it's trading sideways, easy to plot a line because we can see that the stock was on a crazy run. Boom, it hit this price point and it got stuck before it made its run higher. And we have some action happening here that led us to believe that we have another level that we can put a line at 555. Now, if we go a little bit lower, I can put a line here as well. I can also put a line here. So all of these lines that are below the current stock price, again, we have the current stock price 544.44. We have this support right here at about 544 even. We have another one at 532.10, and you can see why I would do that, because after it broke on this green candle, we had a rejection on red, and then it's just hovering above it before it broke higher. And then if we go back, we can see that the stock really consolidated below this level, even gave up some, and then bounced back up for another test before it broke through. So this is another level where we can put support because again, you need 3 or more touches and a rejection to have support and or resistance. Same thing here. We put this line here because the stock was from this side, the left-hand side, was going in an uptrend. Boom, it hit it. It had an issue here, struggling, popped up, went up here, and then when it finally gave up for the next retest, came down lower, tested this a few times, and then brought itself back higher. So that means that on the other side, if this continues to drop, we're going to have a check-in around, and it doesn't have to be spot on. It doesn't have to hit right on 532.10. It's going to be around in this area around 532, 531, give or take. And then we'll have another one here at about 523, 522. Again, because we can see it happened multiple times back here, here, and here. You see we have questions in the chat. Oh, we have some people trying to join. Give me 1 second. Cool. All right, let me check the chat. So you said, do you put a line at the bottom of the wicks where this is repeated touches, or do you put support at the body? So the rule is that if you put it through the body, you have to stay with the bodies, right? And then if you put them through the wicks, stay with the wicks. Normally I go with the bodies because you could have a lot of wicks in rejections at that point, but no actual breaks. And I think that for more scenarios, if you actually have bodies that cross that line, it's easier to chart out than just trying to count a whole bunch of wicks, because wicks can get tricky. And so let me see another question here. Show us when we buy and where we show us when and where to buy or sell. Easy. So if you want to know where to buy and sell, so let's say you already have your chart set up. Again, this is still not enough information to buy or sell. We've only checked the RSI and we set support and resistance. Still not enough. We still need to check our moving averages and the MACD. But yeah, so if we're looking to where we want to set up a trade and we're looking where to buy and sell at, now since we're in a downswing, what I would do is, honestly, you want to buy on support and you want to sell on resistance, right? And normally to break either or, so if it's going to break this level, I need 2 candles of confirmation. Again, we're talking about the daily. I'm not talking about any other time frames because the rules could vary. But if you're looking for a swing trade on the daily, I need 2 candles of confirmation above my level. So if this is support, right? So if the stock has been dropping, boom, this is my level of support. I need 2 candles, 2 green candles above for confirmation for a ride back up to this level here to go ahead and take profit. So if you're wondering where to buy and sell at, I normally would buy on support and sell on resistance. So I would normally buy on the floor, sell on the ceiling. So if it's at 544.44, and let's say we don't get this, we don't get the confirmation above this level. Let's say it keeps dropping, right? It drops here at 532. 532 is where I would be looking to buy. This is the area. Again, it may not hit it spot on, but this is around the area that I'm looking to buy. And then this is the area that I'm looking to sell. So if it drops down to 532, you have 2 sell points. You can sell at this level here, or you can sell at this level there. You can also buy at that level and sell at that level. It just depends on what you want to do. But I like to play reversals. I like to buy things that are low. Again, the whole name of the game is buy low, sell high, right? So if it's dropping low, it hits support. I want to buy something on support and sell it on resistance. That also goes hand in hand when you're looking at the RSI, and the RSI is coming up from a low, right? So it's been dropping, buying low. And as it goes back up to a favorable number and position, you want to sell it high when this climbs from 46 up to 65, 70, so on and so forth, right? Let me see. Yep. So I think that answers the question for you in the chat. But yeah, playing reversals is the easiest way to make profit from swing trading. Sometimes you can momentum trade, but when you're momentum trading, that's in a you got to look at it in a different manner, because you're actually trading off of a high. You're trading it while it's going up, or you're trading it while it's going down if you're playing, options and playing puts, so on and so forth. Any questions? Cool. All right. Let's talk about moving averages. I'm also going to talk about the Bollinger Band, because I always show y'all the moving averages, which can be a little complex. The Bollinger Band is simpler, but I'm going to show you the moving average first, and then we'll look at the Bollinger Band. All right. So let me reset the chart, actually. And if you're having a hard time seeing the chart, you may need to make your screen full screen. This is about as, let me see if I can make this full screen. Here we go. It's about as big as I can make the chart here. I can zoom in on the candles. But if y'all have a hard time seeing it, let me know. And also make sure your phone is in full screen mode, because we still need to see parts of the chart for illustration purposes. All right. MA ribbon. This is the indicator here. Again, top left-hand corner is going to tell us what we're looking at. So with the MA ribbon, a lot of people like to use 2 or 3 moving averages. I like to use 4. And using 4, I only pay attention to 1. Let me show you my setup. So this is the MA ribbon. The MA ribbon stands for a moving average ribbon. Why do you even need a moving average ribbon? Why do you need a moving average? Well, a moving average is basically the average stock price over any given period of time, right? So the MA ribbon that we have set up here, we have a 20, 50, 100, and 200. These numbers, again, this is the time period. So this is 20, since we're looking at the day chart, right? The day chart is the interval that we're on. This is the 20-day moving average. So if you see a yellow line, this is plotting out the stock price of the last 20 days, right? If you see a orange line, that is 50 days, so on and so forth, 100 days, 200 days. One thing to note about these moving averages is that the more days you pack into the moving averages, the more stiff they're going to be. So this 200-day moving average should basically be a straight line with no flex in it, right? So if we look at the 200 MA, which is this red line here, we can see that it's pretty much a straight line with no bends or curves in it, right? But then if we look at the 20-day, which has, way less days and information in it, we can see that it's a bit more curvy, it's flexing, it's bending, so on and so forth, right? So when you have these, if you're using this setup, the only line that you really need to pay attention to is the goal line, the 20-day moving average. So the 20-day moving average pretty much gives you a gauge on what's going to happen with the other, when the candles come in contact with the other moving averages. So if we look here, what you'll notice is that if the 20, 50, 100, and 200 are stacked on top of each other in chronological order, that 20 is going to be pretty much your support. You don't really have to look at the other lines. You just need to pay attention to one line, and it's the 20 line, but that's only if they're in chronological order. So you can see in this area, we have 20, 50, 100, 200, right? All within this area. And guess what? We can look at the candles, and what are the candles doing? The candles are only interacting with that 20 MA, right? Now, what happens when it goes out of whack? Well, we have the the candles drop beneath the 20 and stay beneath the 20 and goes beneath the 50 and test the 100. Guess what? It is bringing the 20 below, right? So it's bringing that 20 down. And once it brings the 20 down, the rule doesn't apply. The rule only applies when you have them stacked in chronological order from least to greatest. So you can see that once the 20 took a dive and it finally regained its rightful position back at the top, you can see that the same, didn't mean to move that. You can see that the same trend started to happen. Once it got back in line where we have 20, 50, 100, 200, guess what? It bounced. Let me zoom in some. After this little dip, we can see right here in this area, it bounced right off that yellow line, right off the 20 line. Went up higher, it came close to touching it here. Guess what? Another bounce off of the 20. And then it peaked out at about 564 and started to drop below. So now that it's dropping below, guess what? That 20, the more days that we give it, that 20 is going to start to bend down because the candles are bringing it down, right? It's going to start to bend down. And if we get that 20 to cross below that 50, then we're going to get some more action to the downside. And if we get more action to the downside, that's going to bring us within this range right here between 523 to 530, if that happens. Do I think it's going to happen right now? No, but we are in earnings season, and I don't have any earnings, the numbers. If I did, I would give you the plays to make you a lot of money off of it, but no one knows except the companies and the CFOs. But I do think that since we have this green candle and we have a bounce off of that 50 MA, what I would like to see is us to bounce, get a few candles of confirmation again, 2 more green candles to where we can start to test this at about 552 and then get right back above that 20 MA for another bounce to keep us moving to the upside. But again, I can't see the future. I wish I could, but right now we're below our 20. We're below our, we're testing our 50. So again, if you combine this information with the RSI, this may not be a stock that you want to trade for a swing trade. Now, if you wanted to go long term, right? If you're buying leap contracts for options, or if you wanted to buy this stock and hold it for, I don't know, 3-4 years, this could be a good dip opportunity to buy on, but it just may take time before it gets back up, you know, to the 550s to 560. There's no guarantee. So that's the risk that you're kind of taking when it's below its moving averages, is that it could keep dropping lower. That's when you check your other indicators. But based on what we've learned so far off of the RSI and just the MA ribbon, is that now we're below our 20, we're kind of in danger zone, and then the RSI is low. It is recovering, but it is still low. So we still want to check our other indicators to see if there is an opportunity for a swing trade to the upside. Let me see, do I have any questions? How do I make it full screen? So if you're on mobile, there should be a button for full screen. I want to say bottom right, or you can hit the 3 dots. And if you're on if you're on a computer, there should be a button like right at the bottom along the options that are at the bottom. Let me see. When the price is well above the 50 MA, will price usually move down? Ty, do you mean the 20? Yeah, 50 there.
Yeah, I guess I mean 20. Yeah.
Yeah.
So
Yeah.
when it's well, because sometimes when I feel like I see bull runs, the
Mhm.
price is always over the 50, right? So, and then the other moving averages kind of trend upwards, but stay below the price, right?
Mhm. Yep.
Like this, when it hits its sort of high, it's well above. It's not sitting on the 20, it's above the 20. Is that sort of like, what's that an indicator of? Just general bullishness, or will we start to see that a lot? Is that an indication that it can come back down?
Yeah, so when you see is that much space between that's a good observation. When you see that is that much space between the candles and the 20 MA, check your RSI. Most of the times that RSI is going to be peaking, right? So you can see that in this area where this was a previous peak, to where the candles got really far away from the 20. If we go straight up to the RSI, guess what? The RSI is going crazy. It's screaming at what, 76. If we look here to where the candles are far away from the 20, we check the RSI. What is it doing again? Extremely high again. So yeah, that's a good observation for a pullback, is that if the candles are getting super far away from the 20, check your RSI. The RSI is too hot. Just wait for a pullback. And if you're into options, you can actually make a play and set up a put to play it back to the downside, because it's going to pull back at some point.
And why do you do the 20 and not the 21?
I think both work. The 20, I mean, it's just 1 day difference in a moving average. That's just the way I learned. 20, 50, 100, 200. I don't know. Again, it's just a 1 day difference. So I don't think it's that much of a change. So if you wanted to use the 21, that's fine. It's just one additional day.
Okay, thanks.
No problem. Cool. All right. MA ribbon simplified. So if you're like, well, 4 moving averages is way too much for me, I can't learn that way. Cool. Just use 2. You can turn off the 100 and 200 now. You're going to get less information, but you're simplifying it. So if you turn off the 100 and 200, you're just looking at the 20 and 50. It's a bit cleaner. And the things that you got to pay attention to with the 20 and 50 is if they cross each other, right? So if the 20 crosses underneath the 50, it's a good sign to step away. Step away from the stock, take profit, or just to be on watch. You may not want to go ahead and get out because you may want to buy the dip, but this is a good indication that, okay, it's doing better over the last 50 days versus the last 20. So you may want to watch it. And then if it crosses back over to the upside to where you say, okay, the 20 is back above the 50. All right, we could go on a run. Again, pay attention to the upside, check your other indicators, check your support and resistance, and prepare for a run to the upside. Again, 20 and 50 is extremely simple, but you're missing the 100 and 200 being there, which I still like to have my 100 and 200 there, because every chart is not going to be this pretty. This is a really pretty chart. That's why I always use the SPY. This is one of the cleanest charts you'll probably see today. All of the other charts, you're going to have your 20 and 50 in different places. and you're still going to need that 100 and 200 to get a sanity check. Should we buy a call or put on the SPY? It depends on the date and time frame you're looking at, risk management, how much capital you want. But right now, I'm thinking that since we're in earnings season, you could, again, it depends on what you want to do. If you want to swing trade, I think anytime that we have a bleed like this, where it's dropping from a peak, I think this is a good time to start looking at leaps, right? A leap, you can stretch it out for 4 months, 6 months, a year. But I think that anytime we had a crazy hot run like this, and we're pulling back, this was at what, 564, we're pulling all the way back to the 540s, pretty much a $20 pullback. I think then it's time to start to consider leaps. Would I play puts while it's already down? That green candle that pulled us up, you have to consider that, right? So if you want to play puts on a green candle, if this bounces, remember, this is support. So if you played a put and this bounces off of this support, this is a pretty strong support. We have a lot of chop there. So it doesn't look like we just can flash and break through this and keep going. We at least have to stop and check in on this. I don't know if I would look at some puts with the information that we've covered so far. I haven't looked at everything else, but the RSI is pretty sweet. We're in a downtrend, but do I think we're going to continue this downtrend? Not quite sure yet. So great question. All right. If the MA ribbon is still too complex after you turn off 2 of the ribbons, I have something else for you. So if you look at this and you're like, still too complex, cool. I have a substitute. Again, we're trading out data for simplicity. We have the Bollinger Band. So the Bollinger Bands look a little different, but it's extremely simple and is really effective on a daily time frame. So the way that this works is that you have 3 bands. You have the upper band, which is this blue line. You have the middle band, or some people call it the center band, which is going to be this red line. And then you have the lower band, which is the blue line. The way that this works is that pretty much once the stock starts to hit the upper band, it's going to want to eventually come down and correct to this middle band. And the middle band should be a place to where you get a bounce. You can see that once we hit this upper band, we pulled all the way back and we still checked in around that 20 MA. We got a green candle and then it still flushed, but it at least stopped to check in and then it flushed again. Now we're testing this lower band, and guess what? When we hit that lower band on this bottom candle, we bounced up on a green candle. So you can use this in a similar fashion to how you want to use the MA ribbon. I think the MA ribbon is better. This is almost too simple to use. It's extremely easy to use, but if you need like some flexibility and variation, and again, we're using the SPY. So the SPY is, again, the prettiest of the pretty when it comes to charts. This may not work on like Tesla. Well, it may work, but it may take some, some tweaking and some paying attention to some other stuff. But this is the Bollinger Band. You can use it in substitute of the MA ribbon. Again, if it hits that top band, it's going to want to pull back to the middle band. If it hits that lower band, it's going to want to bounce up back to that middle band. And guess what? This red middle band is just the 20-day moving average. That's why the 20-day moving average is so important. And how do I know? Let's turn on the MA ribbon. We turn on the MA ribbon and I turn it off. You can see this yellow line here. That's the 20 MA. All right. So if I turn off the 50 and I only have my yellow line, we turn it on, off. It's the same exact line. The 20 MA is that line in the middle of the Bollinger Band. But again, this is a substitute. You can use it if you want to. I don't like using it, but I like to give people options. It's a little too simple for me. All right, cool. Do I have any questions before I keep us moving? Cool. All right, let me turn off this and turn it back on my tool of choice. All right, cool. 2 more indicators, and then actually, let me show you the VRVP. VRVP. All right, this one, the VRVP is a visible range volume profile. So if you would notice, I don't use volume at the bottom of my chart. I use the VRVP. The VRVP tells me the amount of buy and sell volume at each price point. So I don't care about the volume on the day as much as I care about the volume at different price levels, right? So if we look here, these different levels on the VRVP that are sticking out, the blue and yellow, they're called nodes. So if it's yellow and blue, these are like the yellow data. Let me show you. Open my data window. Where we at? All right. So the yellow is sell data. So you can see we have up, down, and total. The up, of course, is buy data, is buying volume. The down is selling volume. The total is just total volume, for that price point. So the up, if I'm hovering on this level, the up is at 18 million as far as buy volume. The down is at 28 million as far as buy volume, right? So there's more people willing to, I said down willing to buy volume, down at sell volume. Sorry. All right. So there's more people selling than buying at this price point, and we can see based on the volume. That's why I like to use the VRVP because it's kind of weird being on the side of your chart, but you can know where there's a lot of volume. And what you'll notice is that in the areas where you have a lot of volume, guess what? You have a lot of chop as well. You can see we have a lot of chop here. We have some chop starting to form here, and then we have a lot of volume built there. Then when you get to this level, right here, we have a lot of buying volume down at that's what 24 million, and the down is at 17. But guess what? We line it up to this area, a lot of chop. So again, this is why I like using this versus the normal volume, is that I can see where there is a lot of buys and a lot of sales, and I can figure out which one is winning to figure out if I want to buy or sell at a certain price point. But yeah, VRVP, the formula for how it's built is extremely complex, but it is easy, super easy to use once you use it a few times, especially on like a live chart. Right now is a stagnant chart, but I think it works best on live charts. Also, the VRVP adjusts itself based on how many candles you bring in. Again, this may be a little too advanced for a beginner trader, but if you can get this down, it's extremely helpful. So again, this is the visible range volume profile. So it's taking in whatever is visible. So how many ever candles you have visible, it's going to give you the volume data on the right-hand side. So you see I brought in more candles, it adjusts. If I take out some candles, give it a second, it's going to adjust, right? And so there's a lot of other tweaks and things you can do. Actually, I think I may talk a little bit more about the VRVP on Wednesday for my Discord people, because you can also shred down these nodes to make the nodes even smaller. Like these nodes are big and blocky, but sometimes, especially if you're scalping, day trading, trading options, you may need these nodes, one, instead of having a node this big, you may want to chop it up into 5 nodes per node, which can give you even more information. But VRVP, incredibly useful tool, can give you the volume data, and you can also replace it with the volume being at the bottom of your chart. All right.
How do you chop it up into smaller nodes?
Yeah, so if you want to chop it up into, sorry, I got someone joining. If you want to chop it up into smaller nodes, wrong indicator. What you can do is we can go to, where is it at? Visibility, nope. There we go. So you can change the row size, you can change the area volume, like change this to 200, and then you can sorry, I didn't mean to close it out. And then you can change this. Well, actually, let's put that back at 100 to make this simpler, and we can make this 200. Boom. So you can get even, you can niche down with it, right? You can get it even more particular if you wanted to. And again, that's if you change the row size. You can keep the value area volume the same to keep it less complex, because if you change this, it's going to start to get a little funky. But if you leave this on the default setting, change the row size, you can get a little bit more granular. And that's good for if you're trading on lower time frames. On the daily, you may not need to have 280 rows like this. You may not need all of this, but that's how you would do it. Answer your question, Ty? Oh, I guess you didn't hear me. All right, cool. Let's keep it moving.
Yeah, I did. Thanks.
Cool. MACD. This is the moving average convergence divergence. Now, this one is just a trend indicator. If you need to know if something is an uptrend or downtrend, this is a great indicator to use. The thing that I think most people get confused with is what these lines represent. The blue line is buying volume. I'm sorry, I keep saying volume from the other indicator. All right, reset. The blue line is buying pressure. So that means the type of pressure that's being applied to the stock, right? So if buying pressure is applied to the stock is going to want to go up. The red line is selling pressure. If selling pressure is being applied to the stock is going to want to go down. How do we know what type of pressure is being applied to the stock? If you look at the right-hand side, the only thing you need to know is what line is on top, what line is dominant. So if this red line is dominant, that means that the selling pressure is being applied to the stock. We already know that the selling pressure is being applied to the stock because the SPY has been dropping for about a week now, right? But this chart confirms that we are already in a downtrend. Now, when this blue line, again, which is the buying pressure, once this curves and crosses and becomes dominant, and this blue line is on top of the red line, the buying pressure is now confirmed to be applied to the stock. If you have a hard time looking at these lines like a lot of scribble scrabble, cool. Check the histogram. This chart is displaying the same information, but in a different way. If you look at this red is saying that we are in a downtrend. This red is saying that, yes, it is confirmed that the selling pressure is dominant for this period. If you look at the green, this is saying, yes, the blue line is on top and the buying pressure is being applied. If buying pressure is being applied, the stock is going to go up. If selling pressure is being applied, the stock is going to go down. Extremely simple indicator. Any questions so far? Cool. I get the most questions here. All right. No questions on it today so far. Cool. So the next thing is that, and the last thing is that what you really want to happen on this MACD for you, and this is if you're trading options and if you're swing trading, you want to know if the blue line is going to cross the red line and vice versa. Because if the blue line crosses the red line, that signifies that the trend has changed. And anytime a trend changes, so right now we're in a downtrend, right? Once we confirm on the MACD that we're in an uptrend, you're going to have a MACD crossover. A MACD crossover normally prints a nice size candle to either direction that the crossover is going to be in favor for, right? So if you have the blue line curving up and it's crossing the red line, you're going to see later on when I show you my picks, I'm going to show you a few different charts, and you're going to see the MACD actually crossing up or down, and you'll see what I mean by having that MACD crossover with a nice candle. But if you watch the SPY, you see this blue cross over the red, you're going to get a nice size candle to the upside. Now, at this time where blue was on top and red became dominant, you had a nice size red candle to start the downtrend. So a lot of people, what they would do when it comes to options, and this applies even to day trading and scalping, they would wait for a MACD crossover, enter in the trade either slightly before or after the MACD crossover, and then just ride the trend to the upside, because the MACD is your trend indicator. The MACD can tell you if we're starting an uptrend or if we're confirming a downtrend. So the MACD, again, extremely simple. And if you know how it works, you just have to be patient, watch it. And I take it into consideration on all of my trades. Let me check the chat. If we place a trade now, should we buy or sell? Should we buy or sell? Well, I don't know if are you Northlake, are you referring to options or shares? Shares. Okay. If you wanted to buy shares, let's see, if we place a trade now, should we buy or sell? With the Fed speaking Wednesday, I would be a little cautious. Again, we don't know what they're going to say. I would pay attention to playing a reversal. So I would be more leaning towards buy than sell, because we've already sold off a lot and we're sitting right on top of support. So if you're looking at selling or buying, if you're already in the SPY, I would still be looking towards a buy because it's on the downside. Now, if the SPY was surging up, then personally, I would be looking towards a sell or a point to take profit at. I try not to sell when things are tanking down, and I try not to buy while things are going up. Again, I try not to. I'm not going to say it works for 100% of the scenarios, because you may find a scenario to where the stock is tanking and you need to get out. But yeah. Can you send a list of indicators? You can take a screenshot. I don't have a list of the indicators. I use the RSI, VRVP, MA ribbon, MACD, and stochastics RSI. If you just want to take a screenshot, or Mark, can you? Well, I guess we could type it out in the chat for you. I can post that for you in a second. But I would just take a screenshot of the setup. That's probably the easiest way to go. All right. Stochastics. This is a secondary indicator. You don't have to use it, but this indicator is good if you're wondering how much energy or momentum a move will have to either side. So right now, we're looking at the stock RSI. It's short for stochastics RSI. It is similar to the normal RSI. The only thing different is that instead of hitting 70 or 30, this likes to hit 0 and 100. And the difference is that you want to play this the opposite way. So if you want the stock to go up, you want a lower reading on the stochastics RSI, because think about it as a coiled spring. This is going to show you how much momentum the move has. So right now, the SPY is down, right? And it's sitting right on top of support. It just touched 0. What is that? On the 19th, it is coming off of 0. Right now, it is at 5. So what I would do is wait until it clears 20, because after it clears 20, this stochastics RSI is going to want to go up to 50, and then 80, and then 100. Again, it's going to want to move up. So, and it moves up pretty fast. Again, we're not looking at a live chart, but this stochastic RSI is going to move pretty quick, and it's related and tied to the normal RSI. So as the normal RSI moves up, it's going to drag this stochastics up with it as well, and the stochastics will reach 100 way before the normal RSI will reach 70. So the thing about it is that this is in a good position right now, right? This is in a good position for a trade to the upside, because it's already bottomed out. It just hit 0. It's sitting at 5. And if the SPY decides to tick up, it has between 5 and 100 to go all the way back up. So this is your, you can look at this as your momentum indicator. How much motion and momentum will I have if this decides to go back to the upside? So since we're low, this is what you would like to see. Again, that's why I said the SPY could be in a position to where a buy and hold would be nice. And then what I would normally like to see is this go from 5 and clear that 20, the bottom of the blue area. Once it clears 20, my next target is going to be 50, and then 80 at the top, and then 100. And you can see, if you're wondering how many times this hits 0 to 100, look at this. This is 100 up here. It hits 100 frequently. It also hits 0 frequently, right? So this is just showing you the fluctuations within the moves. And again, secondary indicator, if you don't need it, if you don't need to use it, don't use it. But I like to use it to see how much energy I will have, in my move. Sometimes you may look at the stochastics and it may already be at 80, right? It may be right here at 80 out of 100. And if you're looking at your move, you can say, okay, well, it could bump up $5-10, right? But if you're looking at a $200 stock and it's going to move up $5 or $10, it may not be worth the trade. You may want to wait until the stochastics pull all the way back down and reset to give you a longer runway for when it pops all the way back up to 100, and you can make all of that profit. But that is the stochastic. So again, if you have any questions about any of these indicators, just let me know. Pretty simple. You don't have to use them all. When I first started trading, I did not use all of this. I used the RSI, the MACD, and I used moving averages, and I only had 2. I had the 50 and the 100. I found out that they were way too slow, so I switched over. But right now, I would recommend 20 and the 50. Get your normal RSI and get you a standard MACD, and that's a good setup for a swing trade, in my opinion. Again, you can look at the 4-hour, the daily, and the 1 week, and you should be good to go. Any questions before I pass it off to Mark so he can cover the pattern of the week? Perfect, perfect. All right, I'm going to go ahead and pass it off to Mark.
Appreciate it, Ladarius. Okay, so because I see we're getting really close to time. It's like 7:15. Instead of doing the pattern of the week first, I want to see if you all have any picks that y'all want me to go over. I'll go over the picks, and then if we have time at the end, I will then go over the pattern of the week. Just because I know lately I've been having to cram in the picks, so I just figured to swap them. Ty, you had a question? Ty, you raised your hand. I see you unmuted your mic.
Oh, hey, I put in the chat Coinbase, Nvidia, Micron, and ARM.
All right, perfect.
I'll type it back in the chat.
Okay, perfect. All right. Okay, so we'll start off with Coinbase. Um, so on the weekly, this looks like this could be a potential bullish flag that's being formed there. We have the flagpole, and we see we're in this consolidation period that we have here. We have this consolidation that's happening. So this could be a potential bullish flag that's forming. It looks like with the stochastic RSI, if it keeps pointing upwards, that'll have room to break this to the upside. This could also be a double top being formed, so just be a little bit careful. We have stop going down. So I'm drawing the macro. I can probably, because it's testing all of this, I would just be just a little bit wary before I get into the trade. I want to see it break above this 273 range or 274 range, excuse me, that I have drawn here. I want to see it break above this resistance line before I start getting into my trades, just to make sure, because it could be testing this resistance and it may break below it. It is, and it looks like to me is in a good spot to break above that. So we'll just have to keep an eye out on the crypto just to see how it's moving. If it was to, I'm gonna draw some stronger support resistance. So we have our resistance here. Again, support, it's a good area at 200. The support before that is going to be this moving average, our 20-week moving average, which is sitting at about 233. So if it breaks below 233, we could be seeing this come back to the 200s. Again, the range it looks like it's going to be trading in right now is going to be the 230 to the 270. So it looks like it's going to be bouncing in that range. And we're waiting to see a breakout between one of those two. So if it can break above our resistance at 273, we could be seeing this moving back up to this to 300. It'll move to 300, and then potentially it'll start to try to get to 350. And if it breaks below our support sitting at 234, we could be seeing this get back to 200. And that's on the weekly. So if we look at the daily for this week, it do have earnings coming up on Thursday. So just be a little bit careful with the earnings. Anytime with earnings, I don't like to play them. I like to get out of my trades before earnings happen. But we could see this. We could see this be trending upwards. The one thing that I'm looking for Monday is, can we break past all of these moving averages we have right here? So we have a cluster of moving averages, and we know that the stock price is going to treat this as either support or resistance. So because the price is above, it's treating this as support. Can we see the stock price reject this these moving averages once more? We see that we had a rejection on Thursday, and then it traded neutral. Basically, this candlestick is just a neutral candlestick, even though it's red. It's in the middle and it's making a cross. So this is a neutral candlestick. So it created a neutral candlestick. So That's just basically saying buyers and sellers are agreeing on the price at the moment and which way it's going to go. So if it opens up green, we're probably going to see it try to reach back to this 270 range. And if it opens up red, we're going to probably see it break below these moving averages, and then it's going to come and try to test up here at about 212. Yeah, it'll probably try to come and test at about 212. That's the next range that it'll probably try to test, just because we have a lot of we have a cluster of testing in this area. So that's another strong support line to have. Now, looking at the other indicators, the stochastic RSI is pointing down. It's trying to get back to that oversold range. And then we're really close to a crossover on the MACD, to where the MACD, the buying pressure, is getting close to crossing below the selling pressure. And anytime you see that, we know we'll see a decrease in value. So we could be seeing this decrease. The one thing that we want to pay attention and look out for is, can it break below these moving averages? If the price breaks below these moving averages, we're probably going to be seeing it get back to this 213. And if it doesn't and it rejects, then we're going to be seeing it try to trend back up to this range we have here drawn at 270. And again, reminder, earnings is Thursday. So just be on the lookout for that. Wednesday, you may want to be out your trades just to play it safe, because with earnings, it's a 50-50 chance and we don't know which way it's going to go. But that's what I see so far on Coinbase. You got any questions on Coinbase now?
No, that's great. Thank you.
All right. So then we had Arm Holdings. All right. The weekly, been trading ARMs quite a while. ARMs on the weekly, we see ARMs has been breaking past the resistance. These resistance we've been having, and we see that it's been treating them each one supporting resistance as such. So we see currently it broke below 147. It tested the 140 resistance line we have here. On the weekly chart, it's looking like this could be going lower. Just looking at all the indicators that I'm seeing, they're all pointing to being bearish. We have the RSI pointing downwards, the stochastic is pointing downwards, and we're really close to that MACD crossover to the downside. So I would just be a little bit careful. Price is currently at 149, so it's once more testing our 140 range again, or 147 resistance. If it breaks below that, it's just going to come and try to test this 140 range again. And that's going to be a strong support line, just because we're going to have that moving average, our 20-week moving average. It's going to be relatively close to that support line we have. So that's going to be the next place if it was to decrease in value, or if it was to be bearish. If it was to be bullish, again, because price is at 149, our next level of resistance is going to be 160. So that's where it can potentially make it to 160 if it was to go up. This one also has earnings, so just be a little bit careful. I won't go over the earnings spill again, but it does have earnings, and it has it on Wednesday after market. So with this one, you want to make sure if you're not trying to play earnings, to be out your trades by Wednesday before the market closes. And looking at the daily. So we're looking at the daily. Again, it's been testing this. It tested this 147 resistance support line we have, which was also the 50-day moving average. So it's testing that moving average. It looks like it tried to reject it and trend upwards. It just went back down again. So it's just battling on that moving average. If it was to break below that moving average, we'll probably be seeing it get back to this 140 support line. Now, looking at the indicators, the stochastic is really low. The MACD has separation. It does have that separation. So we could see this trend a little bit downwards, but if not, and we see it reject, it's going to come and try to test this 160 range we have drawn on our daily chart. And then from there, if it breaks above that, it's going to try to come and test this 20-day moving average, which is going to probably be, it's going to be somewhere in the middle of these two resistance that I have at 160 and 166. So we'll probably see it try to come in, test 166 if it was to break above our 160 resistance that we have drawn here. This one, just looking at it and looking at the indicators, I would be a little bit careful, and I will wait for that confirmation that it's going to break above that resistance before I get into a trade, just because of that separation we have on that MACD and the fact that stochastic is super low and we had that crossover, we have the separation. We could see it trend down there just a little bit longer before we start to see it turn around.
I typed some messages in the chat. Questions.
Okay. Let's see here. Coin go up or down? You know, if a multi-frame chart. Okay, so will Coinbase go up or down? So again, we'll have to wait for the market to open to see. So if Coinbase was to go up or down, I can go back down to that one. So if Coinbase was to go up, again, we want to see it open up green on Monday, and if it was to go up, it's going to go to 271 or 270. So that's where it's going to potentially make it to. Again, we want to make sure that the market opens up green and we.
Do you know of any multi-time frame indicators, trend indicators, multi-time frame?
I don't. So these are the indicators that I use right here. I'm not sure Ladairs know of any, but these are the indicators that I use, the same as Ladairs was using.
What are those?
Yeah, when you say multi-time frame, do you mean indicators that you can use on multiple time frames? Is that what you're asking?
Yeah.
Yeah, so you can use these. So normally the indicators that are good.
It shows all the time frames on one screen. It'll show it. So if you're trending in, say, 5 time frames, that's a strong indicator. It's going to keep trending.
All right, wait. You're telling us about it, or
I'm asking if anybody has it or uses it, know where to get it, or.
Oh no, I don't have any, and I don't use it. But I do have indicators that can work on different time frames. But no, I don't have any. But yeah, if anyone in the chat have any, you can go ahead and post them in the chat for North Lake. Back to you, Mark.
Appreciate it. All right. And then back to ARM. So again, for ARM, we're waiting. We want to see when the market opens. If it opens up green and is rejecting this 50-day moving average, we're going to see it go to 160. So that's where we'll be seeing it. So if it's opening up green, you can get into your plays and have your strike price at 160. If it's not and it's rejecting this 50-day moving average to the downside, it's going to go to 140. So just be on the lookout for that. Ty, you have any questions, or anyone else has any questions about ARM?
So when earnings is coming right up, is there anything that you could do from a technical analysis perspective to kind of give you indication of how earnings are going to go? Because that's like the $1 million question, right? That's what makes everybody so nervous.
Yeah. And I would say I haven't found anything. No, I steer away from earnings. I've learned my lessons multiple times about earnings. For me, there's no way that I can determine which way it's going to go, because you never know what they're going to say in the earnings call to cause the stock to go up or down. Like they may have a good earnings where they beat it, but then the focus for the next quarter may be down. They may say they're expecting lower revenue the next quarter, and then that'll cause the stock price to go down. Or you can see stocks that have bad earnings reports, and then for the future they have a high insight. They're saying that they're going to beat their numbers next quarter, and then that can cause it to rise. So it's always a 50-50 with earnings. You never know. People can say it's going to go this way, and it might go that way, but it's a 50-50 chance. You never know until you're in that earnings call and you're seeing what's happening. I always just like to watch earnings from afar.
Is there like a time range that you should avoid earnings? Like don't trade, like try to trade, don't touch something that's going to have its earnings 2 weeks away. Like, is there sort of a time frame that we should keep in mind?
Yeah, for me, the time frame is just be out of it before the earnings, like let's say this earnings is going to be after hours Wednesday. So I'm making sure I'm out my trades on Wednesday before the market closes, because sometimes you'll see stocks go up prior to earnings, and then they may go down after the earning, once the earnings happens. So it's always, and the indicators and your analysis are going to work up until earnings. Once the market closes, that's when that's when your indications, your indicators go out the window. So as long as you're out of it by then, you're fine.
Okay, thank you.
No problem. Video. Okay, perfect. NVIDIA. So let's look at, so NVIDIA on the daily, we see that it's been fighting off of this resistance we have drawn here at 115. Support is at 110. From the indication, from the analysis, again, stochastic RSI is really low. RSI level is in that sweet spot, is pointing upward just a little bit. And we have separation on the MACD to the downside. So we could be seeing this go a little bit lower. If it was to go a little bit lower, it's just going to test support. It's going to test 110. I'm thinking that we're probably going to see this be green for the week, potentially. Again, it's hard to say because the market isn't open. Once the market opens, you can get a better judge on what's happening. But if it was to be trending upwards, we're going to see it test 120. And that's just because that's going to be where our moving average is. And this is also a resistance we've drawn previously. And if it was to break above that, it's going to test this support, or excuse me, this moving average of 20. And that's going to be at 122. So we could be seeing NVIDIA get to 120, and then after that, 122 in the next day or two.
What's giving you that indication?
So if it was to open up green, I'm just looking at if it was to open up green, these are the places where it's going to go and test. Okay, so if it's trending upwards, we know it's going to test 120 because that's going to be our 50-day moving average. Right, that's where our 50-day moving average is going to be, and because the stock price is below the moving average, it's going to come and try to test that area. And if it was to break above that, it's going to then try to test 122.
Are you also looking, because it's sort of on a downtrend, it's testing lower lows. Is that giving you kind of indication that it would sort of be bearish?
Yeah, so if it's gonna go down, it's gonna first come and try to test this 110. So if we was to see it go down, it's gonna come back to 110.
Okay.
So you can, that's why you want to wait until the market opens. So if it opens and it's coming down, wait to see what happens at 110. If it's rejecting 110, then you'll have indication that you can potentially it'll potentially get back to 115. If it was to be rejecting our 110 support area. Does that make sense? You have a question about?
Yeah, thank you.
Mm-hmm. So just keep it, again, it's Sunday, so you just got to wait until Monday happens to figure out how it's going to move. And if we look at the weekly for it, you can see on the weekly is showing us that it could be in the downtrend, right, for the weeks, because we have stochastic pointing downwards, and we have that the RSI level is low, and then we also have a crossover that's about to happen. And so with that, that'll take us to this 110 range. And then after that, if it breaks below that, we'll probably be getting to like 103 to $100. But on the daily, just if you're trying to just do a quick little trade, watch the daily and see if it opens up green. If it opens up green, because where the stochastic is at, it's showing us that for the daily time frame, it'll be at the bottom, and we may be seeing this increase in value. I'm not saying it's going to get all the way back up to 132, but we could be seeing this get back to 120, 122 range before it starts to cool off again. Micro. Micron. All right, so we have MU. It's sitting at $110, $109, $110. Support 106. If it was to break below our support that we have drawn, it's going to be going to $100. So again, we just had this crossover to the downside on the MACD, which is a bearish indicator. If it was to break below, We're going to be seeing it try to get to $100. And then that's going to also be close to this 50-week moving average. The 50-week moving average will be closer to our support that we have at 100. So we may be seeing a rejection off of that point. We'll just have to wait to see what happens at that. But if it was to break below, or if it was to trend down, we're going to be seeing this get to $100. Now, if it was to trend upwards, we're going to need to see it break above our support we have here at 114. 114 would be the range. If it was to be green, we're going to see it try to test 114. Then if it breaks above 114, we'll be seeing it get to 120. We'll have to wait till the market opens to see how it's looking. But that's the ranges you have. So downside for puts, if it was to break below 107, you're going to be seeing it get to 100. And if it was to break above 114, we're going to be seeing it get to about 120 on a weekly. And if we look at the daily to see which way it's going, so on the daily, it's looking like it's getting close to the bottom to where we may see that rejection. Stochastic RSI level is really low. RSI levels is low, but it's pointing upwards. It's getting closer and closer to that sweet zone that we like to trade in. And we see we had this test at 107 on Thursday. We do have a red candle on Friday, but we're just waiting to see what can happen. It needs to break above this 113 range. If we can break above 113 or 114, we're going to be seeing it come and try to get to 120. And then if it was to break below this again, even on the daily, it's showing us this 200-week moving average, a 200-day moving average is going to be that. It's going to be our support line, which is also lining up with our $100 support line. And with that 200-day moving average, again, that's a strong line. So if it tests that 200-day moving average, we're probably going to see a rejection from that point. And if we see that rejection, it's going to reject us back up to this 106 range. So just be on the lookout for that. If it was to pull back, you can also use that as a good place to get into a trade and swing it up to 105, from 100 to 105.
Thank you.
Mm-hmm.
Thanks.
Yep, no problem. Any other stocks? So if y'all come up with any other stocks, just let me know, and once the dares, if we have time and the dare passes back out to me, I'll go over.
All right, cool. I appreciate that, Mark. Yep. So the links are posted. I'm just responding to the chat real quick. The links are posted above. That is the 7-day free trial for the Discord. Again, for the people that are here in the meeting, it is $50 a month. Normally we charge more, but if you want to try the Discord out, check it out. If it's not for you, totally fine. You're still welcome to come into these sessions. We also have our new YouTube and Instagram links there as well. And we do post buy and sell signals in our watch list channel. We also post, entries, exit levels, stop loss, so on and so forth. Again, if you're interested in seeing what it looks like, once we stop the recording in the meeting, stay a little bit afterwards. It may take 2 or 3 minutes, and we can show you the channels in our Discord, and then we can show you, the signals channel if you're interested. All right. Let me share my screen so we can take a look at a few things that I've been watching. It's not everything, but for the sake of time, where are we at? We're about 7:37, 7:40. So we got about 20 minutes. That's fine. But show you 4 stocks that I'm paying attention to here. Boom. All right. Well, let's start on ELF. All right. So ELF is one that I've been paying attention to for a while. ELF has been killing its earnings. I'm scrunching the chart up because I don't want you to pay attention to the chart right now, but look at all of the green E's at the bottom. So all the green E's are the earnings that ELF has posted. And normally ELF beats its earnings. So now that ELF was on a downtrend, I think this came from Ulta. I think there was some bad news about Ulta coming out. And then I think ELF received some slight downgrades, but I do think that ELF at 182 would be a nice buy. You can see in this area, ELF has been 210 to 220 before. We actually played ELF up to 220, I want to say, because I called it at, I think, like 180, 170 before. But yeah, I think it was actually down here before where it went back up to 220. So I'm thinking the next test that we get on 220, eventually we're going to break. What you'll notice is that ELF is making a giant bull flag, right? Again, a bull flag, you hear me say this a million times. If you've been in our sessions, is that it's a strong move up. That is the flag pole here. And then we have consolidation to the side. And then if we test this top line again, this top resistance, we can go ahead and break through and move higher. So right now, ELF is, and you can even look at the VRVP. Again, the VRVP is extremely helpful because it identifies where a lot of volume is at and where you can find a lot of chop. Look at these two nodes right here and look at what's happening. In these price points, you have a lot of chop and stagnation, right? Before it move up. And we haven't had any move downs, once we got into this area. So we went into this area from the upside, a lot of chop, broke higher, came down into this area, a lot of chop, never dropped below it, popped right back up to the upside. We're coming down, we're back into this range again. We may get some chop if we stay in, but it looks like on this candle, we're actually back into the zone. So we could be testing 190. I'm looking for a break at 190 up to 200. If we get a break to above 190 to 200, then I'm pretty much calling the top again, another test at the top at about 220. And if we get another test at 220, we can see that we had a lot of rejections at 220. But I like to look at this as like, a lumberjack chopping down a tree. We tested it once, it didn't work. We didn't bring the tree down. We tested it a few times here, it didn't bring the tree down. But I think that if we test it again, coming off of a hot earnings beat, then I think that we can break that 220, get into the 240s, 250s, and then potentially we could hear about ELF splitting. I don't think that we'll see ELF, fully become a $400 or $500 stock. I think that we could get some splits before that even happens. So ELF, they have earnings what is that? In August, and we may see our earnings run. So I'll run up into earnings right now. I want to see more confirmation to the upside. This is a nice size candle. This could have been a really nice day trade because on this day, let me zoom in here. It started at 174 and it ended the day at 182, 183. So about a $9 hop. Well, actually, if we look over here, it's a $12 jump on that day. We had a $12 jump on that day. Would have been a really nice option trade, but that tells a lot from, again, it tested that support, bounced right off. If we get another confirmation candle, that should put us at about 185 to 190. We go 185 to 190, then we can set our eyes back on 200 and prepare for earnings. So I have this one on my watch list because beauty is an industry that a lot of people don't pay attention to, that you can make a lot of money. Like if we scrunch this chart up, you can see that ELF has been on a run, right? This is September of 22. It was 36 bucks and it has been as high as 220, a little bit higher than 220, right? So everyone is paying attention to semiconductors, but you have massive growth and gains in stocks like this that people aren't paying attention to, that are now down, with the entirety of the market, that you could have some nice gains back to the upside as well. So ELF is one that I'm paying attention to. Let me check it on the weekly. Yep, just more of you get a better picture here of how it's flagging. Strong move up, still bouncing around in this area. If we get another break back to the upside, then again, I think that 220, we could take it out. Let's check the other indicators. The indicators right here, we're looking at a pullback on the weekly. Again, it started from this giant pullback from that price, about 210 down to about 180, and then it bounced off. So again, I'm convinced once I see another pop up to about 190. So 182 is nice, 7% gain on the day, but I still I'm convicted with confirmation, right? So I need to see a break above that 190 in the hole, because if it goes up to 190 and rejects, we're coming back down to 160. So that's what I'm looking at here. Can we break 190 this week and hold? If so, we're looking at 200, 210, 220. But if we break 190 and we can't hold, we're coming back down, stopping at 175, and then we could see 160 again, which it's still within this channel, still within the consolidation channel, which could open you up for more gains to the upside if you get in here. But I think with this one, patience will be key. So if you're looking at playing an option on it, you could pay attention to the 190 price point for a strike. But I'll also watch the downside and then look at the broader market to see what's happening. If the broader market is moving to the upside, this will easily move to the upside with it. But if the broader market is moving down, I don't think that ELF is going to be strong enough to move against the market. So pay attention to the SPY, the Qs, or the QQQ, whatever you call it, and see which way it's moving. Again, 190 is what I'm paying attention to right now for a move to 220. I'm sorry, 200, 210, 220. I still think we're going to see 220 again before the end of the year. So if you're looking at buying shares, buying it at 182 would still be nice. And then buying it at 160 would be even better for a longer hold. It just depends on, again, your preference. So ELF is on tap this week. I'm paying attention to see which way we're going to go. Is it going to recover? Is it going to bounce? What kind of news we're going to get? And if it's time to make some gains. Looking at it on the daily time frame, excuse me, it looks nice. 47 RSI pointing to the upside. You also see that we're bouncing off some consolidation. Again, targeting that 190. And you can even look at the VRVP, how it's curved out to where we have low volume until we get to that 200, right? A lot of low volume here until we hit 200. So if this decides to go, we could see, again, 190 to 200 this week. Also, MACD, that downtrend is starting to weaken. And we're working on a MACD crossover to the upside. If we can get this MACD to cross over to the upside, we have a 47 RSI that we can take all the way up to about 60 to 65 for profit. And then we have these stochastics. Again, this is your momentum indicator. It's already past 20. I would like this stochastics to go from, it's at 29 right now, which is decent. I would like it to go to 50. If we can take 50, next level is 80, and then 100. So a lot of momentum, a lot of promising momentum to the upside. But again, we have to see what the majority of the market is going to be doing. So ELF, yeah, let me see. ELF contracts are super expensive. 185 call is 25.60 for 11.8. Yep. So if you're going to go that far out, Yvonne, yeah, ELF is going to be, especially because ELF is going into earnings. And again, I think that the premium on the contracts are coming from the fact that, well, first of all, ELF is a $200 stock, but second off, ELF always beats his earnings, right? Like, again, you check the earnings. We had a miss here, but that was in 21, and before that, I think that's the only miss since ELF has been publicly tradable, right? Will we get a miss here? I don't think so. But because ELF is a high growth stock, but closer to and you may have to, I mean, if you want to trade this, you don't have to stretch it all the way out to November. You could check some October. Oh yeah, it may only be a quarterly stock as well. So you may want to look at like some August, September contracts if the November contracts are too expensive. Or you can also look at, if you don't want to do a 185 in the money, you can look at a, I wouldn't go higher than like a 190, 200 call if you're going to go in that direction. But yeah, so we got ELF. Let me keep it moving. I have a few minutes, got about 13 minutes here. Celsius, this is one that we've been trading for a while as well. We've taken it to the top plenty of times. We actually traded this up to about 95, 96 twice. I was in it here and I was in it there. Now that it's sold off, I have been buying it. I bought it started buying, I want to say at 50. I think I bought some at 47. And I should have bought some at about 45, but I was just waiting. If we zoom in on the chart, we can see that it's touching that bottom line that we drew a while back. And I said that we could get this low, right? We drew this line, I don't know, what, a month and a half ago. But this is the bottom line that I have for the stock. You can see it's even bouncing back to the upside. Now, it does have earnings on the 8th. So earnings are approaching. But I think that ELF, you give it 6 months, ELF could be back at 90, $100. Again, the way that I look at it is that it tested 100 and gave up. tested 100 again, gave up, and I think that we could see this go for another run at 100, but the levels that it's going to test back to the upside have to be 60 and 70. If they can't reclaim that 60 and 70 price point by the end of the year, then we may see some stagnation. But the reason why I have confidence in this one coming back up is because, again, we have Pepsi. They own about, I want to say 8 to 10% of the stock. They own 8 to 10% of the stock in exchange for helping to distribute the products. And Pepsi has been in the game when it comes to that for a long time. So, and Pepsi wants their money. I don't think Pepsi is just going to let this drop when this has been bringing in a lot of money for them, and they may buy even more of the stock. But this is one that I'm watching. Again, it's on my watch list. I'm not saying that this one will be an option trade. Now, if you wanted to do a leap on this one, I would be targeting the 60 to 70 call for a long leap, unless you want to go in the money at about 45 to 50 to where it's already at and stretch it out for 6 months to a year. That would be nice as well. But earnings is going to tell us a lot. And if we look at the earnings for them for the last year and a quarter, they've been beating earnings. They even had a split because they were running hot. So I think at $48, the stock is a steal. And it's going to be interesting to see what they were able to do coming off the summer quarter. So it's been a summertime. Celsius has been selling drinks. I think they're even breaking into the international market. And that's, matter of fact, breaking into the international market is what started this downtrend, because they had to change some of the ingredients for their products that they couldn't sell in international markets that they could sell in the U.S. market. So do I think Pepsi is just going to let them walk away from the table? No. Pepsi has been in the game for a long time. I'm pretty sure Pepsi has a plan for them, but we'll hear more about that and what they're going to do about that at the time of the earnings call. So I think shares is the way to go with Celsius. The cheaper, the better, in my opinion, because I honestly think that eventually Pepsi is going to buy the company in whole. You know, they're just going to go ahead and buy the whole thing eventually. But that's what I have for Celsius. Let's look at some other tech stocks. All right, MongoDB. This is a interesting one. So MongoDB is a database or data center stock. I think that this one is extremely cheap. Right now, it's $253 a share. If you're buying shares, don't be afraid. You can buy fractionals. But at 253 bucks a share, this stock used to be almost 500. And you can see, if I zoom in here, you can see that it was up 480, 500 multiple times. Back in 21, 480, 500. It came all the way back from, it was down here at 140, climbed all the way up to about 500, and then came back down. So what I'm watching to see is what happens after it bounced. Again, the VRVP helped us here. We can see that we had a bounce here where it was high volume. It is bouncing off. It's kind of making a cup and handle for my pattern people. And you know, a cup and handle is bullish. And what I like to see is this cup and handle to pull us back up around 270, 280. If we can get this back up to 270, 280 and hold, I think that we can run back up to about 320. And if it revs higher than that, we could see about 340. So 320, 340 is what I'm looking at for a swing trade. Again, what I'm looking at now is on the weekly. So it may take a little bit of time to get back there. But you know, $80 to $100 profit on this stock if it goes back up into the 340s, 350 range would definitely be a nice swing. And then again, if you want to go with options, they're going to be pretty pricey. A $250 stock, and you're stretching it out for months. It's going to, you know, it's going to come with the ticket. But I think that we could get there. And again, if the option contracts are too much, you can always go with shares, because I believe profit is profit, right? All right. We also have a pending MACD crossover to the upside, which is nice. Again, if we get that pending MACD crossover to the upside, it's going to pop us up. The one thing that I'm watching on the weekly is that the RSI is kind of low at 38. That's why I'm saying that I would go long. Anytime you have an extremely low RSI, my rule of thumb is to go long or to add a lot of time to your contract if you're going to go options, because a low RSI means that you know, the investors or traders could be not so happy about what's going on with the company or the stock. But, you know, just like, you know, how follow the leader works out, once this starts to heat up, it goes from 38 and pops up to 45, 50. Everybody's going to be back on it, moving it back up into the 55, 60 range. And then now it's a little too high to even trade. But right now, again, that VRVP is what I'm paying attention to as well. I like this gap of low volume here, and the fact that we have a pending MACD crossover, we have space on the stochastics, and we're making a cup and handle. So a little bit of a long-term play. But with that cup and handle, we break out above again 260, 270. This thing is going to run, and it can run up to about 320, 340 before it stops. So MongoDB is definitely one I'm paying attention to as well. Again, the goal with trading is to make profit. You don't have to have 120% profit. If you have that, cool, that's nice. But I think that as long as you can put up wins on the board, I think that's more important than having a massive gain, because you can have a massive gain and take a risk, and then you can take another risk and lose all of that because, high risk, high reward. But I think consistency as far as how many wins you can put up is more important. If you traded every day for 3 months and you hit on, that's what, 90 days. If you hit on, well, you're not going to be trading all 90, but for this example, you will. So you trade 90 days, and let's say you hit on 80 out of 90 trades. That's, in my opinion, that's better than hitting on one big trade and, not being able to do it again. So consistency and practice, being able to hit your target is what I would pay attention to now, especially since the market is on sale. All right, PANW, Palo Alto Networks. This is a good alternative to CrowdStrike. CrowdStrike, I was asked, what, a week ago, 2 weeks ago, should we touch CrowdStrike? I said no. Right after I said that, it kept going down. So if you want to go with their competitor, Palo Alto Networks is their competitor, which they should see. I'm not going to say a massive inflow of business because the investigation is still kind of going on with what actually happened. I'm hearing what happened, but a lot of companies are revising their contracts to see if they're going to stay with them. And if they do, things are just going to pan out normally. But if they don't, Palo Alto Networks could receive some of those contracts. But I still think that this stock is a winner. Also, if you're into like quant data, Nancy Pelosi, of course, has options on this stock. So she's been winning on this stock for a while. It had a massive sell-off on its earnings, 2 earnings ago, dropped all the way down to 261. Now it's back up to 326. And I really think it's going to finish closing that gap and take us back up to about 365 and potentially go up into the 400s, because now we're starting to see how important cybersecurity is. And I think Palo Alto Networks is going to start to get more and more attention as we go on. Again, Nancy Pelosi she has money in this stock. She can help influence policies that could help the stock as well, especially since one of their competitors, CrowdStrike, has pretty much dropped the ball. So aside from that, the stock is in a nice position on the daily. RSI is at 49, pointing up. It's also sitting and testing. It just bounced off support at about 320, which is a major support for it. We have a cluster of it tried to break through 320 for about 2 weeks, tested it here, and now it's testing on the top side. So that's an easy bounce back to the upside. And what I would watch out for is a break at about 330, 335 before it goes back up to about 340, 345. If we break 340, 345, easy run up to about 350, 360, and then we'll have closed that gap that we made during earnings where it dropped out of the sky from 365 all the way down to 261. So about $100 drop will be closed as it climbs back up. Again, it has a lot of momentum behind it, and this could be a nice move to the upside. Again, it's expensive price point wise, but if you just focus on percentage gain, you should be okay. And you don't have to buy, a full share at $300. If you can't, you can put in 100, 200, whatever you can afford to still get the same percentage gains. So these are the stocks that I'm watching thus far. I do have a few more, but I'll be posting those in the Discord when I have time throughout the week. I do have some that I'm going to be posting, fresh and early tomorrow morning before the market opens. But again, the biggest thing that I want y'all to take away from today is watch out for Wednesday. We have the Fed speaking. I don't know if it's going to be a down day or an up day, but there's going to be a lot of chop and volatility on Wednesday, Thursday, and Friday. So whatever happens Wednesday, we're probably going to see some, some after spill or overflow on Thursday and Friday when it comes to the momentum of the market. So let's pay attention to that. Do I have any questions?
So do you recommend avoiding trading Wednesday, Thursday, Friday?
I won't say avoid. I would say check your positions to see where you are with them and if you need to shave profits or if you want to buy the dip on something, just in case it falls down, right? I would be more cautious to a pullback than it pops up, right? Because if it makes profit, fine. But if it pulls back, that's what I would be, more cautious of. So if you have anything you're up over, let's say your target percentage for your portfolio is 30% per trade. If you're up 30% on the swing trade and you're going into Wednesday, let's say it's, Tuesday at 3 o'clock before the market closed, you may want to take that profit. It's already, 30%. We don't want to be greedy. And because you never know what could happen.
What if you're 20% up or 15% up?
It depends on how long you've been holding the position and if if that's good enough for you. It depends on also, how much capital is added. If you have $100 and you're at 15%, you're up $15. You may want to take the risk. But if you have 10,000 in there, you're up, almost 2,000, then you may want to take it. It just depends. I'll leave that one up to the trader. But yeah, that's how I'm looking at it. Does that help, Ty?
Yeah, thank you.
No problem. Transmedics. All right, we can do one for the road. TMDX has been going crazy and it's pulling back, it's finally pulling back. This thing has been stuck up since since the last time we traded it. We traded this one. We started trading this recently we started trading this one. This was about in the 90s before it popped from earnings. It went up to about 130 and it sailed its way up to the 150s to where it's been having trouble. It's pulling back right now on the VRVP. We can see it's on a heavy node. So what we would like to see is a pullback below this. If it pulls all the way back to 130, I'm buying it. If it breaks 130 and drops, I don't think we will see Transmedics back at $100. If so, I'm buying hand over fist. I'm not telling you to do that, but I've been watching this company since it was about $20, and now the fact that it has hit 150, a pullback to $100 is a steal. I think this is a $300 company easily. They really don't have any competitors, and they're in the market alone for right now. But yeah, Transmedics still a great stock. Even with the market fluctuations, this has just been between 140 and 150 for pretty much a month or 2 months almost. So if it breaks below, I would say like 137.50, it breaks below that and it drops down to about 137. This is where I'm going to start to buy, and then I'm going to wait to see what happens if it locks below, let's say 125 or lower. If it goes below 125 or lower, we could potentially see it drop down to 110. And at 110, I think that's where the party stops and it'll start to go back up. That's if it drops that low. But it does have earnings Wednesday, the 31st. So that's going to be interesting to see. But a lot of people have been trying to short this stock as well. So we could see a short squeeze. This could pop up to 200 if people are still shorting it. I haven't checked the short data in a minute, but from what I'm hearing, a lot of people are still trying to short the stock because it ran up so fast. But if it's a nice earnings and they're holding on to it, we could see this pop back up and break that 150 and hit about to 200. What does earnings mean? So earnings is basically a report of the profits and profit margins and a whole bunch of other financial data that the stock has accumulated over the last 90 days or quarter. And if the data is great and the forecast moving forward is great, the stock is going to move up normally. And if the data is bad, and the forecast is bad, the stock is going to move down normally. The reason I'm saying that is because there's no guarantee that if the data is great, it's going to move up. I would say 6 or 7 times out of 10, it's going to move up, but you still trying to play options or, trying to time it and bet on earnings, not a good thing. It's literally a coin toss. But if this pulls back, again, moving forward, I think it's a $300 stock easily. I would buy the dip and just wait. Again, that's my take on Transmedics. I'm a fan of the company and the CEO. Cool. Seems like that answered her question. All right. Well, we're at time. It is.
Ladarius,
Sure. Yeah.
quick
Yvonne?
question. Could you tell me where you go to look to see if where you're checking for the short squeezes at?
Yeah, honestly, I would just go to Google and type in short interest. You can also check macro trends. Macro trends have a boatload of data. But it's kind of like an older looking website, so it may not be visually appealing. I use macro trends for a lot of stuff, but you can just go to Google short interest on Transmedics, or you can just type in short interest on blank ticker, whatever ticker you want to see, and the data is widely available. But I like macro trends. But again, it's not a pretty site. It's kind of old, but it works.
Okay, thanks.
No problem. Cool. All right. Well, that is all. Let me stop sharing my screen and stop the recording. I want to thank everyone for coming out. If you're interested in joining the Discord or at least seeing what it looks like, hang around a little bit afterwards so we can answer your questions, give you a demo of it. Again, we are doing a 7-day free trial for $50 a month. And you can ask whatever questions you want after everyone leaves and we give you a demo. But for everyone else, again, thank you all for joining us and hanging out with us. If you're in the meetup, leave us a review on Meetup. I don't care if you hated it or loved it. We just want more reviews. That's how we get you all to find us via Meetup and other platforms, is based on reviews. Right now, we're over 100 reviews, and we're at about 900 plus members on Meetup. So we're targeting, we're going to hit 1,000 members before the year is out. But your reviews are great, and they give us an idea on what we need to work on or ideas on what we can make for you all, aside from all the other stuff we have on our backlog to make for you all. So again, we appreciate you all, and enjoy the rest of your Sunday.
Thank you, guys.